So now let's move on to the next session. That is NTC alternate data scoring for next gen. And for this session, I would like to invite Shantanu, Shrish, non-executive director, ex-MD, WebId, who will be moderating this session. And joining him will be Nitin More, business development director, advanced.ai, and Parikshit Chitalkar, co-founder, StashFin. So I'd like to invite the speakers on stage. I request everyone to kindly be seated. Ladies and gentlemen, please take your seats.
Hello.
Hi, hello. Hello.
Yeah, I think we're good to go, yes.
Good afternoon, everybody. Before we set on the topic, I would just request the fellow panelists to introduce themselves. Nitin.
Hi, I'm Nitin More. I work as Business Development Director for India. We are a company, we basically do, we are an AI and data analytics company. We work on the a lot of onboarding, KYC journeys on the consumer lending side. We are present in about 20 countries, headquartered in Singapore. And in India, we have been here about 2.5 years and work with about 100 odd FinTech companies today. We work on the onboarding, a lot of alternate data scoring, integrations with a lot of data partnerships today in the country. And right from onboarding until credit scoring, decisioning, all of the play into digital lending today. We have also secured, we started in 2016, headquartered in Singapore and worked about 20 countries, but we secured about $400 million of Series D funding last year, and today we are about double unicorn status. And we want to grow into the country in the process that we're doing in all of the onboarding and alternate data scoring and decisioning. Thanks.
Thanks. Parikshit, please.
Thanks, Shantanu. So I'm Parikshit Chitalkar. I'm one of the co-founders. Thanks, Shantanu. So my name is Parikshit Chitalkar. I'm one of the co-founders at StashFin. StashFin is a digital lending platform started in 2017. We're about 200 people strong based out of Delhi. We service about 2 million customers, and our product is to provide salaried consumers credit line lending solutions.
Thank you. So setting the context, lending. Lending has been one of the oldest professions in the world. From Mesopotamia to India, Rome, everywhere lending for almost 3,000 years, there has been history of lending. Now gradually what happened was, initially it was temples, because people were God-fearing in Rome, and they really wanted, when they were borrowing money, they could repay it in the name of God. Then it transitioned into people who knew each other, that trust built up gradually, and they moved on. And this is how modern banking emerged. When modern banking emerged, it was actually the credit worthiness of a customer, what was evaluated for providing a loan. And for credit worthiness, there is something, a term which all of you know, is the credit score. Now, credit score actually is a catch-22 situation. Why I say so is that to have a credit score, you need to have a credit already. Now, to have that credit, you need to have a credit score. So it's like a circle, a vicious circle, and especially people with no credit history or very little credit history really face the issue of getting credit or loans from any of the financial institutions. So, and mostly I would say it is the younger generation, the millennials, who really form the great population in India, and they are the sufferers because they do not have a credit history, and the financial institutions are in no way eager to provide them with the loan, and because it's a high risk. Now, there's an alternate way how people are approaching this problem. It is this NTCs, for NTC customers, there are few factors what are being evaluated. For example, the behavior of the customer. For example, it can be the intent, why he is taking the loan, and the second is the ability to repay. Next is the lifestyle. What kind of lifestyle is this person into? And thirdly, there is also some psychometric testing happening where the psychology of the person is evaluated. So keeping these things in mind, I would come to Nitin with the first question, like what are these behavioral patterns, actually the new behavioral patterns for such things?
Yeah, so we are seeing consumers today, very low on credit. They need credit today, but they're very active on, say, for example, social media. So there are various demographics. We can capture a lot of identified persona of this individual today, because although he's salaried, but he's really new to credit, but he leaves his digital footprint on large avenues of media today. It could be social media, it could be his pattern of spending, it could be his cash flow, his e-commerce transactions. So I think this is a real change in the behavior that we are getting day by day. We had traditional bureau scoring done for years and years. I think the millennials are getting into some of the new forms of transactions. So I think everybody needs to tap into that. These are really hungry for credit, but we do not have enough data points. And these data points could be captured from really the footprint that is living everywhere. I think that's where really, if you talk about 200 million NTC population today, I think every bank wants to get into that, that sphere. And I'm sure that a lot of it will change over a period of time, or new variables will get added into whatever scorecards we have developed. And that's where I think new players, even company Advanced AI, we're doing new initiatives on this alternate data scoring. I think I'll leave there, but maybe we'll catch up on what are these variables, how do we catch up to that, how do we score them, etc., yeah.
Thank you. Parikshit, but what are the challenges in underwriting actually?
So, Shantanu, that's a great question. So, ultimately, we have to start by recognizing that underwriting NTC is like picking up pennies in front of a road roller. It is a very hard and inherently risky proposition. However, the opportunity is huge. There's an area of responsibility which we'll speak about as well. So therefore, it has to be solved. What you brought upon was a very important point. You have to assess this problem in two parts. So there is an ability and an intent of the customer, and both have to be looked at separately. So while the universe of variables such as social media, telecom usage, mobile penetration, e-commerce usage, behavioral data, connectivity, all of these things play a factor. They play different roles in assessing ability and intent. So looking at both those in isolation is very important. So the first part is the intent understanding, which is essentially to identify ID fraud. So is this person actually coming in as an NTC customer because they are not truly NTC, but they are trying to conceal their credit identity or take on somebody else's identity? And in that sense, you have to look at those variables in an entirely different way. The same variables can be viewed differently. And then once you look at the ability side is really understanding what is causing, why are they NTC? So, you could have a person who just comes from a very wealthy family, just never had the need for credit, and applying for a home loan or an auto loan for the first time, that's also NTC. Or a person who is, starting out a small business in a tier 2, tier 3 city, that is also NTC, right? So it's actually very important to understand how to judge the same. So the same telecom usage variable or an e-commerce variable or a social media variable will tell you an entirely different story in these parameters. ultimately, when you look at it, at the end of the day, your underwriting decision has to be based on what the probability of default is going to be. And that becomes a very hard problem in NTC. So the point being that you have to look at this in a very holistic way and then build your risk-reward ratios accordingly to be able to underwrite this successfully.
Correct. There are agencies who provide this credit score. For example, CIBIL. CIBIL has come up with the CIBIL Credit Vision NTC. That's a score between 101 to 200, which provides the credit worthiness for these NTCs. Now, if it's a 200, you're very good to go. Similarly, Experian has for the past 4 years or more, they have been using this product and they have a scoring from 1 to 10. But they tap only the, I would say, a small segment of this market. But what about the ones which are really untapped or who are like, unserved? Can both of you throw some light on it? Yeah.
Yeah, so see, I think there is a very clear distinction to be made between a good borrower and a bad borrower. So I think over a period of time, that distinction is not very apparent, because I think traditionally we have seen lending to be done really to a good as well as a bad borrower today. But I think that time has come when you have to really separate the good and the bad with clear distinction of data. I think that's where a lot of value will come in, because then we don't have NPAs, we'll not have issues on repayments, because we actually categorize a good and a bad. So I think over a period of time, traditionally what our bureaus have built, there is a lot of infusement of additional data that will go in. And a lot of companies have started doing that, including advanced AI. I think that's where, I think you touched upon some of the, the models here, but I think that's primarily where the models really need to kick in. And whatever scoring, etc., we do has to be really, the model has to evolve, because the variables have evolved. The pattern of evaluating the risk of the customer has evolved. So I think those changes need to go into what will come in future.
So, interesting point around model. So, in your example, for example, model 1 says 200 is very good and model 2 says 10 is very good, right? Scales are different. So inherently, it's important to understand what a model is actually doing. A model essentially is giving you a scale of predictions, varying strengths, right? And then also it's important to think about how the model was built in the first place. So in the NTC space, and we do a fair bit of this model development in-house. We have an in-house data science and machine learning team. What we are trying to do is essentially to understand past behavioral data to develop the predictive power of this machine learning model, which is what essentially all models are. So therefore, when you build a model, especially for NTC, what you're trying to do is essentially lookalikes. So you have seen some performance of X customers. Another set of customers comes in where the key bureau variables are not available, the trade lines are not available. You look at other variables and you say, okay, this seems to be from the same demographic, same area, similar income patterns. So let's try and underwrite it like this and then see what the results are. Ultimately, it has to be this feedback loop where a principal lending decision is a risk-taking decision that you have to make, and then learn from that decision and feed it back. So so models are indicative, but absolute lending on them ultimately is a risk decision that you have to make.
Exactly. Now these NTC customers, they are actually really new, and they lack a couple of things. For example, they may overborrow, or they may default on the loans which they have taken, or they might simply do not know how much to borrow, and they keep on discussing that I need this much from different bodies. So how do we handle or tackle these issues for these?
So this is evolving, right? I mean, we have not looked at NTC. I mean, the data is all gathered today, but even if you look at, for example, social media data today, right? So I have my footprint on WhatsApp. I'm a Meta. I use Instagram. I'm on LinkedIn, Skype. But have we any points really gathered to really evaluate how long is my email been existing today, or have I had any breaches on my email already done? Am I on Twitter? Then what is my LinkedIn profile like? So if professionally, if somebody wants to look at me and say, oh, I'm a so-and-so year old, I'm employed, LinkedIn profile, photograph looks like this, can I make some cohorts or distinguish this customer A versus customer B? I think that's the distinction that we are going to bring in. And I think that's precisely where a lot of these social media patterns, social media usage, all the apps that I use will come into play, and that will really distinguish, I think, going forward, many of these things.
So I think again, very important point that you brought up. Lending in a developing country like India is a regulated business for a reason. It has to be dealt with a degree of responsibility. So things like, again, going back, why is this person NTC? When we are all growing up in India, I think there is generally a lack of financial education. We don't really go through a course or a class in your school to even understand what compound interest means, what the effect of leverage is, how to kind of, savings is a culture, but you don't really understand, this is not taught to you formally as it is in other more developed economies. So therefore, as a principal lender, which we are, what ends up happening is there's a strong responsibility that you have to take on your own shoulders. And I think it's a very, uncommonly discussed topic in this country. So thank you for bringing it up. It is our responsibility as a lender to actually think about these things. Are you, providing them more credit than they are used to and therefore creating excess leverage? Are you putting them in a situation where you're giving them very high consumption credit? So, giving loans to just buy phones when the income doesn't support it, and therefore putting them into a coercive collections loop yourself, right? These are things that you have to think about. And I think digital lending platforms are more responsible than banks for doing this. The reason being, your power is the digital dissemination of information, right? We are app first. We're kind of, the app platform was built first. A bank is a branch first model. So for a bank to educate a customer, the expectation is for the customer to come to the bank, have an interaction with a person, while as our storefront is the app, is the digital medium itself. So I think it's very important for lending platforms, specifically digital lending platforms, to take on this responsibility of first educating the customer base and then being responsible and prudent in their own lending activities, so that you don't put customers who are naive into a situation where they are dealing with a credit instrument that they don't understand and they can't really service with their income.
Got it. Now, a leading Indian bank, now what it does is that it does an advanced scorecard for evaluating such customers, and one of the scores is given to CIBIL. But there are other factors which come into place. For example, let's say utility bills or the telecom usage, of course social media, which you briefly touched upon, and then e-commerce transactions, collections. So how would you kind of relate or tap into these factors?
Yeah, so you brought on collections, which is very important. I think we saw about NPAs, and so I think importantly, what I feel is that there is a lot we can do in how we can improve the collection efficiencies today. Primarily because what I can bring additionally with this data can be actually overlaid on, say, a bureau data, for example. So I can see some patterns on how the behavioral, characteristics or the variables, distinguish a customer A versus customer B. So I think that's where I can bucket certain customers who are more riskier, and then I can say that, I need some real good a collection strategy for a riskier customer versus a less riskier customer. So how do you bucket that? Right? So the bucketing really comes from all these parameters that can overlay with some of the social media characteristics I can bring in, overlay with additional data, the demographics that I carry. All that is really very important on the collections side of it. I think we have seen a lot of improvements when this data has come in, with one of the studies we are doing with one of the largest bank in the country today. And I think that reference point becomes very important, because that actually brings in some of the patterns of data we can really replicate for many other banks. So I think we are actually heading towards that direction with many banks, with taking this as a learning on the collections as a very big use case in the country.
Parikshit, if you'd like to add.
Yeah, so if we, for instance, underwrite about anywhere between 80 to 120,000 pretty much NTC customers on a monthly basis, and our NTC customer base is fairly large, north of 1 million customers. Again, like I was describing earlier, that is a function of how our models are looking at what footprints is available and then comparing them to the balanced footprints that come from sort of some lookalike variables. So all of the variables that you described, such as social media, telecom usage, e-commerce, mobile data, all those become a factor. However, you have to be fairly responsive about how you are deploying the rules once you see patterns of behavior, because the core, what older banking models are trained on, which is essentially trade line based analysis on how they performed on a particular loan, actually doesn't exist in NTC. So it's a fairly challenging problem, which needs very sort of minute levels of focus on a very regular basis to kind of keep in check. But it's also a very large area of opportunity.
Lastly, I would just like to understand from what's your viewpoint, what does the future hold for this actually?
So, like I said, I think it's a very, very large area of opportunity. So if you look at the bureau data, the bureau has about 500 million imprints of customers in India. Out of that, approximately 40 to 45% is actually NTC. So that means that the file is thin. You don't have enough trade line information, but the person exists in a bureau. Then, and these numbers are sort of available with the bureaus. The inquiries that they get on a monthly basis, about 25% of those are NTC. So clearly, the origination problem of NTCs being made aware that there is credit available from them seems like that is getting addressed. However, if you look at the what loans are being made out, that 25% only results in 15% of the total loans being made out, which means that there is a real need for lenders to understand how to accurately underwrite this population and disburse these loans. So that's clearly a huge area of opportunity. So we certainly will be deploying a lot of focus going forward to develop this base for us. And then secondly, if you step out of it, we are only talking about 500 million people who have a bureau imprint in the first place. What about the next adjacency of that 500 million that actually has not even made it to the bureau imprint yet? That is an even larger market. So in fact, if you look at it from one lens, if you develop expertise in underwriting and servicing, and servicing this segment at a low cost is also equally important. But if you develop that expertise, which we do a lot of work on, it can actually be probably a larger segment than the ETB segment, which is so yeah, we view this as a very, very large area of opportunity as a lender in India.
Sure. Anything to add?
Yeah, I agree with Parikshit. I think there is a huge scope. I think we are evolving. There is we talked about the NTC population. A lot of alternate data avenues to work on. We're already there as advanced AI. We're categorically looking at these variables, creating new models. I think really distincting the good and the bad. So potentially a lot of opportunities to work in this area. I think we can go into some deep dive demonstrations of some of these products as well. Thanks.
We have very little time left, but are there any questions from the audience? No, I think it's fine. So please, there is somebody there.
Hi, I am Vishal Jain. I am from Choice FinServe, which is a NBFC company. So my question is from Parikshit. In NTV, we are having both the issues. One, we are not aware about the paying capacity of the customer quite well. We are also not aware about the intentions because we are not having sufficient data. According to you, what are the three most critical things which we should analyze in such kind of cases where NTV customer is coming to us?
So a great question. So the way I would look at it is I would obviously look at intent first, because establishing the fact that this person is who they say they are, and it is not a case of ID theft or impersonation, probably in our view is probably the first thing that you should look at. Once you establish that, then you get into the assessment of do they have the ability to pay. And that's where the other panelists spoke about alternate data, what their banking has been, what the strength of their cash flows is, multiple ways of arriving at that conclusion. That I would do, as the second. And third, and often overlooked, is what is going to be the best method or the most cost-effective method to actually service this customer over the long term? Are they digitally savvy? Are you going to be able to collect money from them by sending them a message, or are you going to be needing feet on street to sort of service them going forward for collections or for loan servicing, for things like that? So I think in sequence, that is kind of, those are the three things that we would focus on when underwriting NTC customers.
I think,
Thanks.
I think there was another question. Anybody? No, there's no other question. So we would like to wind up, and I would say that right now it is an alternate source, but very soon it will be not so alternate, because this is a thing which has to be taken care of today or tomorrow, and one fine day it will be on the main path, not like an option. So with this, I'd like to end this session. Thank you, fellow panelists, and thank you, audience.
Thank you so much, Shantanu, Nitin, and Parikshit, for joining us.